Welcome to the Silent Trading channel on Tuesday, the 14th of April. Today we'll be going through the gold chart to check and see whether right now, after touching and after reaching the above border, right, above border of the triangular frame that I've drawn beforehand and then rebouncing, right now is it going to break resistance or break out of this triangular frame, right, triangular sideways frame, or will it reverse from over here? So we're going to be checking it out and confirming it. But before I start, please subscribe, like, comment and share if you like this video and to support me in my trading journal, right? Today we'll be going through the 4 hours chart first, right, as ever, because we'll be always going through the 4 hours chart first because it is the most optimized time frame to enter a position, right? So on the 4 hours chart, right, I have explained previously from yesterday, right, that if this candle is able to produce a bullish price action, we will buy at the next candle retracement, correct? And as it seems, the next candle retracement, right, went down to form a bottom wick before pulling back up and then closing as a doji, right? And after closing a doji, the next candle went to form a little bottom wick here over here and then start pushing up, start expanding, and the next candle expanding, right? This continuous expansion shows us that the chart is ready to go up continuously. It is ready to continuously expand, but will it expand above this triangular frame that I have drawn beforehand, right? And as you can see, I'm not that accurate, but I analyze the chart based on price action, based on my previous experience, based on my accumulated experience, right, that I've been in a chart, and based on the knowledge that I have acquired from my mentor. And this is the experience, this is the knowledge that I've acquired from my mentor, right? And it is able to tell me where is the price going to rebound from. And as you can see, it pushed up all the way to form a high wick, but wasn't able to break past this border over here, which is what I've drawn beforehand, and then rebounding. And now we're looking to see if this rebound is going to form a bearish reversal or not, right? If a bearish reversal is going to be formed here and also going to be complete here, we will then start selling at the next candle retracement and then wait for the price to drop down, right? But if a bearish reversal or a bearish price action isn't able to complete over here, we are not going to be selling, because we know that a bearish price action has to be formed and has to be complete before we can start selling, right? Especially when the main price action on the higher time frame is on the bullish side, correct? As you can see on the daily time frame, the price action is on the bullish side, right? Right now the price action is on the bullish side, right? So all we need to do is we wait to see if there will be any bearish price action formed. But the problem is, once we have looked on the daily time frame, we see that the daily time frame isn't able to form any bearish price action yet, because it is continuously, right, it was continuously accumulating sell side volume and hasn't been able to take out those accumulated sell side volume yet. So if the chart isn't able to take out accumulated sell side volume yet, it is still going to continuously break above, it is still going to continuously expand above, which means by selling or shorting the market right now, you are going against the trend, correct? Unless a bearish price action wasn't able to form on the daily chart, never mind, but at the least a bearish price action must form on the 4 hours chart before you can start shorting the market or selling off the market, right? So right now, this isn't the best spot to start selling off the market, even though it has rebound, right? It has rebound from this triangular frame, from the border of this frame over here that I've drawn beforehand. even though it has rebound, it is only rebounding to take up buy side volume, correct? Sometimes a rebound is only just to take up buy side volume after accumulating buy side volume on the way up, right? Because why? Even though when the chart attack resistance, there will always be sellers, right? Sell side volume accumulated, but that doesn't only mean that there will only be sell side volume accumulated. There can also be buy side volume accumulated when the chart is trying to go up, because there will always be panic buyers and panic sellers, right? There will not always be panics. There will not always be sellers at resistance and buyers at support, because sometimes, for fear of their bottom position going deeper and deeper into drawdown, they will start entering a position by panic buying, correct? When they are in the deep drawdown, they'll start to hedge their position by panic buying and panic selling. So once those holding a position below in a drawdown, when they start panicking, they'll start panic buying, and the panic buying was to hedge their losing position. And after hedging their losing position, the chart will then reverse, right? It will only be a temporary reverse, right? A temporary pullback, just to take out those buy side volume that have been bought from panic buying, correct? And after taking a buy side volume and this candle is starting to pull back, it is telling us that it has a chance of pushing up, expanding above more than even reversing, but we are not to be sure that it is going to expand above until what? Until this candle push up and break this previous candle's wick, this previous candle's high wick, or at the least this resistance over here. So if this candle is able to push up and break this resistance over here, the next candle retracement is where I'm gonna buy. Or at least if you are a bit impatient, go look at the 1 hour's chart and wait for the 1 hour's chart to push up and at least break one key level resistance, and then the next candle retracement is where we're gonna buy on the 1 hour's chart. Okay, so right now when we look at the chart, we look at it totally based on price action and psychology. And psychology isn't just the retail trader psychology, but we trade based on whole human behavior and whole human psychology, no matter the traders on the small money side or the traders on the big money side, right? Because you have to be able to think from multiple perspectives to be able to predict and anticipate the best possible outcome for every single position that you're entering, right? Because if you understand human psychology, you're going to be able to understand what the big money is going to do, where the big money is going to trap traders, where the big money is going to accumulate and take out traders, right? And where the small money is going to enter their position, their trades. And after understanding all of that, will you be able to enter at the best possible spot in a market, in the chart, and at the best possible price that is available at that moment, right? So always predict based on what? Based on reasoning, based on criteria, based on condition that you have set up. Don't enter trade based on emotion, based on just panic. I can understand your point of view when you're panicking, because the market sometimes is trapping you and pushing you into deeper drawdown, right? But the best possible way to solve all of this problem is not panicking. The best possible way to solve all of this problem is by understanding what the chart is going to do, where the chart is producing bullish price action, where the chart is producing bearish price action, and act according to the best possible outcome that you have predict and as anticipated. Okay, so we do not enter any position based on emotion, based on panicking. We enter position based on where we are positioning our problem solving position, where we are positioning our profiting position, where we are positioning our hedging position, right? And where will be the worst possible spot that we have anticipated that the chart is not going to reach, and after reaching, we will be able to take out our orders, close off our orders, and take that loss, right? So all of this takes understanding, not just reciting the theory, reciting the strategy, and then acting just based on what you know from reciting, but not acting based on what you're understanding, right? Because most of you guys, once you have got some strategy, some theory from someone, from some mentor, from some teacher, you're only acting based on what that strategy is telling you, but you're not acting based on what you understand, right? You're not acting based on your understanding of that theory, of that strategy. So every time you face a problem after entering a position, you're never going to be able to solve that problem, right? You're never going to be able to solve that drawdown. You're never going to be able to manage your risk, your portfolio, because you do not understand that theory at first, right? You only enter based on what it is telling you. It is telling you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and you're acting only based on all of that condition, but you're not acting based on understanding. So when problem arise, you'll never be able to solve that problem. You'll never be able to manage your portfolio according to how it should be managed, right? So right now I'm telling you guys that we always wait for the best possible spot to enter a position to be able to get the best possible outcome that we want. And in the worst case scenario, if that position is what we have analyzed, what we have read the chart on, and enter a position based on all of those analysis, trust me, you're going to be able to solve that drawdown. You're going to be able to manage that drawdown, and you're going to be able to close your position. If not at break even, you will be able to at least close your position at the least loss possible, right? So now look at the chart based on everything it is telling you, not based on your emotion. Don't be biased. Never ever be biased on the chart, because being biased is what it is using emotion to trade. So we're never going to be using emotion to trade. We trade using reasoning, right? So right now we wait for a bearish price action to be formed before we enter at the next retracement, a sell side position. But no, I don't think it is going to reverse. But if in the worst case scenario that it reverses, I'm going to be entering at the next candle retracement. But if not, I'm going to be waiting for this candle to at least, or at the next candle to at least break this resistance, and then I'll start buying at the next candle retracement, because I believe that the bullish price action, the main bullish price action, is still strong, even on the higher time frame, on the daily time frame, or on the week time frame. Okay, so for today, this will be all I'm going to be analyzing and going through with you guys, and I'll be looking forward to seeing you guys tomorrow. So for today, see ya.